Welcome to The Explainer. Today, we're unpacking one of the most consequential earnings reports of the season, Intel's Q3 2025. You see, the stock has been on an absolute tear this year, but the real question is, can the company's performance actually justify all this hype? Let's get into it. So let's just dive right into the core tension here. While investors have been having a great year, a growing number of analysts are starting to sound the alarm. They're basically saying the stock's incredible run might have gotten way ahead of the company's actual underlying business. And this really lays it all out, right? On one side, you've got this incredible market optimism that sent the stock soaring. And on the other, you have some pretty fragile business fundamentals. It's all setting the stage for a true prove-it moment for Intel. So, what's really at stake here? Before we jump into our scorecard, let's just set the baseline. What are the key numbers Wall Street is going to be glued to on October 23rd? Okay, so here are the big ones. The street is expecting revenue to land somewhere around $13.1 billion. But the really crucial one is that second line, profitability, or non-GAAP EPS, is expected to be right around break even, 0. Anything that moves the needle significantly from these numbers is going to move the stock, for sure. To really figure out what a win or a loss even looks like for Intel, we're going to use a simple 3-part scorecard. We're focusing on the 3 business units that will absolutely decide the company's fate: the PC division, the data center battleground, and their massive foundry bet. First up, we've got client computing, the traditional PC business. This is still the big engine room for Intel, their largest source of revenue. And maybe more importantly, it's the cash cow, the cash seed corn that's funding this entire ambitious turnaround. Now, what's really interesting here is this huge tailwind they're getting from the end of support for Windows 10. This is basically forcing companies to upgrade their PCs. So we're watching to see if this, plus the excitement around new AI PCs, is actually driving up not just sales volume, but also average selling prices. All right, let's move to the real battleground, the data center and AI division. For years, Intel has been what you'd call a shared donor here, just losing ground to competitors. The big question is, can they finally stop the bleeding and turn this into a real profit engine again? So their game plan has 2 main parts. First, defend the castle. Protect their leadership in core data center CPUs with powerful new chips. And second, build a credible, and this is key, a cost-effective business in AI accelerators to try and carve out a piece of that absolutely booming market. Okay, now for the big one, the real high-stakes gamble in this whole strategy, Intel's foundry business. This is a massive, multi-billion-dollar bet that Intel can start manufacturing chips for other companies, not just for themselves. It's a huge departure from their entire history. And make no mistake, it is a huge gamble. Right now, the market sees its massive operating losses, and we're talking billions with a B, as this perpetual drag on the company's overall health. It's basically an anchor tied to the stock until they can prove it works. So this brings us to the million-dollar question for anyone investing in Intel. What does getting this massive, money-losing business under control actually look like in the real world? Look, the answer isn't going to be in some fluffy press release. It's in the hard numbers. We need to see smaller losses quarter after quarter. We need to see disciplined spending plans. And most importantly, we need to hear them announce new, named customers for their most advanced manufacturing tech. But just when you think you've got the story figured out, there's a massive wild card, a landmark strategic partnership that pretty much nobody saw coming, with the king of AI itself, Nvidia. This thing has completely rewritten the script. And listen, this isn't just some friendly handshake for the cameras. This is real. Nvidia is putting its money where its mouth is, to the tune of $5 billion. A direct strategic investment into Intel. That is an enormous vote of confidence. So where's all that money going? Well, they're working together on 2, frankly, game-changing product lines. First, custom CPUs that slot right into NVIDIA's dominant AI systems. And second, a whole new breed of PC chips with NVIDIA's RTX graphics built right in. This is a huge deal, turning a fierce competitor into a core partner. Okay, let's put it all together. Here's a super simple framework you can use to judge the results when they drop, breaking it down into the bull versus the bear outcome. The bull case, a clear win, is pretty straightforward. They deliver across our scorecard. The PC business over-delivers, the data center and AI group shows real progress, that foundry loss gets smaller, and we get solid proof points on the Nvidia deal. Now, the bear case? Well, that's just more of the same stuff that's had investors worried for years. disappointing margins, stalled growth, and no real clarity on the foundry. So here's the bottom line. Intel doesn't have to hit a grand slam here. They don't need to win on every single front all at once. But after the stock's massive run, they absolutely have to prove that they're making tangible, measurable progress. Which leaves us with the one big question hanging over everything. Will this be the day Intel's story finally shifts from one of hope to one of execution?